All right, let's talk about Nvidia. Look, the expectations for Nvidia here were basically unbeatable. The expectations were some of the most insane that I have ever seen. So going into Nvidia earnings, it's just really important for you to know what Mr. Market actually thought. Take a look at this X post I made at my account at RealMeKevin. Nvidia guided $28 billion of revenue, and everyone is expecting a 14% over-guide beat per Goldman, and that would lead to a negative 15% stock move. A 28% beat would keep this company break even. And you can actually see that a little bit more in detail right here in terms of guidance and expectations for their beat. So you really needed to beat by 28% just to break even on this puppy. Good news. Their numbers came in at $35.1 billion over 28, which was what they originally guided, which is actually a beat of 25.3%. So they got pretty close to these crazy lofty expectations. But if you're wondering why a company can make that much money and yet still somehow be somewhat flat after beating by that much, it's because markets were expecting it. Markets were demanding it, I think I should say, is the better way to go about it. The expectations are insane. And they're kind of insane going forward as well. One of the ways that you can really visualize how kooky some of these numbers are is just by lining up the expectations of prior quarters and then how much Nvidia actually ended up beating by in those quarters. So an easy way to do that is just look at their press release from the last few quarters. And I already did that work for you. You can see that right here. In Q4, which they're about 2 quarters ahead with their fiscal calendar here. So Q4 is technically like calendar Q2 for us. But they had $22 billion of revenue and guided for 24. They ended up guiding a 9% beat, but they ended up coming in with 26. So they have a history of beating their expectations here, or their guidance. Then they guided for 28, which was a guide of 7.7% of a beat. So they went from guiding a 9% beat to guiding a 7.7% beat. Now they beat by 25%, which is really, really good, but they're only guiding by 6.8% for the next quarter. And this is where a lot of folks are sort of scratching their head going, oh no, have we sort of peaked out on growth? And of course, this has always been a concern with Nvidia, that at some point when Facebook, Google, Microsoft, Amazon, and X, Elon Musk's X and Tesla, stop buying Nvidia chips and they're built out, who is going to buy the next chips? And one of the things that led to some additional nervousness was that Jensen started talking up those other opportunities, which made people start thinking, is the peak in of some of that growth? Take a look at this. When you jump into here, you could see Jensen, and he talks about this in the earnings call as well. He really gets into focusing on industrial robotics. And one of the things I've been talking about over the past couple weeks now is I've been talking about how robots are going to be the next phase of the recession. That is, when companies end up laying people off in the next recession, they're more likely to hire robots than people for certain tasks, more so than ever before, because robots are not an EPS expense. Robots are an asset that you then depreciate. So you actually have a lower expense, which is good for your earnings. So from a tax point of view, buying a robot is a way better idea than buying basically human labor back, which is really bad for the next recession. It'll extend the next recession and worsen it, but it'll make it pretty good for robots. And I think one of the reasons Jensen is talking robots is because, yes, robots are the next phase, and they're really the next phase of growth for chips, right? Trying to not just train now LLMs, which are basically becoming a commodity. I mean, China's got really good LLMs now as well. But what happens is you've got to move to the next phase of growth, which could be, okay, how do we train robots to basically get to LLM quality in terms of their vision, their ability to walk around and move and do things? That's maybe the next growth. And so this is then where the questions come, okay, but is that growth going to be with Nvidia, or are people going to make their own chips by just calling up TSMC directly. And so because of that uncertainty, there's a little bit of an asterisk that once we move away from Blackwell, we don't know if Nvidia is that next big thing that is going to keep doing robots for us. I personally think a lot of the public companies that are available to invest in now are exceptionally expensive for investing in robotics. That's why right now we're going through due diligence on a robotics startup as well as some other nuclear robotics and space-related companies that we want to potentially invest in as a venture capital style investment. So I'm thinking about making an investment into what we're doing due diligence on, and we might be able to open that up to about 99 other people. Not our rules, it's an SEC rule. We might be able to open up that to 99 other people, so make sure to subscribe and stay tuned for that. We'll have like a little application or something if we do that. And then you could join us. But this is really interesting because when you think about robotic startups, we might be pretty early on that phase. So when Jensen was asked about, okay, well, what about Blackwell? Because that's where the money is now, honey. When is Blackwell going to sell more Blackwell than, when's Nvidia going to sell more Blackwell? Then we're going to sell Grace Hoppers. And Jensen punted on that question and basically just talked about how Blackwell production is in full steam and how wonderful everything is with Blackwell, how it's such great hardware. And then he gets into talking about how there are thousands of AI startups coming and they're going to increase demand. And people are like, come on, man. It's not the thousands of AI startups that are going to spend money on these $30,000 chips that have one-star reviews on Amazon. Oh, wait, sorry. That one-star review on Amazon is only because the price here is $28,000 for an H100, which is about $6,000 lower than what they were a while ago. I'm seeing this on other websites as well, not just Amazon, where there's only one available. But if you go to the review, that actually is a GPU this expensive should run Crysis, but it doesn't. Oh, that's a pretty big burn on Crysis. Obviously a joke of a review. But this idea that there are going to be thousands of AI startups coming, what you're really doing is you're shifting the desire for demand from massive companies with endless cash like Mark Zuck and Goog, and you're saying, yes, all the broke startups, they will have demand for Blackwell. No, they probably won't. So it's possible this AI enthusiasm in Nvidia might start shifting more towards what we've seen with Palantir style companies, and therefore those service companies that are actually implementing real AI growth. Look, for example, at Snowflake. Snowflake's up about 20% in the pre-market because they beat guidance by a measly 2%. But people are like, it's like they're like a shark in water looking for growth. And they're like, 2% growth? Yes! And run on over, over to Snowflake. Now, don't get me wrong, Nvidia's still growing, and that's the crazy thing. Like, they're still guiding 6.8% of growth for the next quarter. But the market is so baking in that this growth is going to keep going and going and going that any slight hint of a slowdown is what keeps a lid on the stock price. Consider this for a moment. You've got, let's see here, where was it? You've got guidance on margin. Margin guide at 73 to 73.5%. That's down from about those mid-70s, and they're talking about how Blackwell is costing a little bit more to kind of get to market, and therefore margin's going to get hit a little bit. And so now people are starting to question the pricing power of the company. Wait, what? You can't raise the price and offset the slightly higher costs of bringing Blackwell to market? Is it because of the overheating issues? To which, of course, Jensen, as expected, shouts out his partners. In this case, though, he didn't just shout out Super Microcomputer. He literally shouted out SK Hynix, Vertiv, Micron Spill, Amcor, KYEC, Foxconn, Supermicro, Lenovo, Quanta, Dell. He basically shouted out everyone. so no specific pump there of his brothers, so to speak. But look, you can't blame this company. They have an amazing product. They make an insane amount of money. And the actual balance sheet is phenomenal. $38 billion of cash, $7.5 of inventory. Yes, accounts receivable, so a lot of people are bagging on this. Accounts receivables roughly, not quite doubled, but almost doubled here, which does make you wonder, like, are your customers paying? They don't show doubtful accounts here, but, we've got current liabilities that are half of what their cash position is. So I really don't think we have a balance sheet issue here. And the cash flow from operating activities is just insane. $17.6 billion. They're throwing into plant, property, and equipment basically nothing, less than $1 billion, because frankly, they just design the chips. They don't manufacture the chips, right? This is a big deal because it does mean that other companies can manufacture the chips too, like Apple. Hey, we're not going to use your chips. We're going to design our own with TSMC. Or Tesla. Hey, thanks, Nvidia. We used you for a while. Now we're going to make our own. This is very common. The big boys eventually do that. Tensor Core processors are available at Google. They have their own. You've got Amazon has its own chips. I mean, you get it. It's not to say that Blackwell is bad. It's not to say that Nvidia is bad. It's just to say that, honestly, Mr. Market is loony with its expectations. And unfortunately, that's just going to make it harder to kind of hit those high thresholds. If the actual growth continues at Nvidia, though, a realistic price to earnings growth ratio puts this stock at closer to $200. The issue is you really have to sustain that growth. And as soon as there are growth concerns or pricing power concerns, which we're seeing here with margin, or punting the question about when Blackwell is going to outsell H100s, and this talk about shifting to robotics, and this talk about shifting to thousands of other AI startups, all of those four things together put a little bit of a, I hear the melody in what you're singing, and it's not what I like. Mr. Market is kind of kooky, okay? So there you go. Fantastic company. Market expectations are ridiculous and ludicrous. But honestly, what can you do? It is what it is. And in the meantime, markets will be euphoric about software plays and obviously MicroStrategy. But hey, there are winners, there are losers, and then there's black coffee. Enjoy. Oh, by the way, if you want my alpha report every morning, make sure you go to meetkevin.com/alpha. It's totally free. You get it texted and emailed to you, and I'll give you some guides on where I think stocks are heading, options volatility, options to play, and a lot more information on catalysts to pay attention to for the day or going forward. Just a really easy kind of cheat sheet for your day. Obviously, can't guarantee that everything's going to be perfect, but I'm just going to guarantee you that I will give you my best effort. Thank you so much, and we'll see you in the next one. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.